I didn't know where I should put that money to use because due to my parents' generation and the peers around me, I was only exposed to fixed deposit. Yeah.
I know I must start investing. I need to start investing, but you are not ready. You don't have the knowledge. Then maybe it's still not yet the right point to go into investing.
Big dreams start small. You should leverage on the power of compounding. There's so many products available. All you need to do is to study and get started.
Struggling to keep up? Welcome to the FOMO Fix. Raise your hand if you have ever said, I will start investing when I have more money. But what if more money never ever feels like it's enough? Hi guys, welcome back to the FOMO Fix. I'm Hazelle from the Joyful Investors, your navigator on this journey to financial empowerment. And whether right now you're a student or someone who is starting out, investing might seem out of reach. But the truth is that you do not require a huge sum of money to get started on investing. And sometimes it could be as simple as just $100, and that will be enough to get you started on this journey. Now, joining me today, I've invited Regina and Owen. Welcome, guys.
Hello. Hi, Hazelle. My name is Regina. I'm from the Research and FinLit team at SGX. We are the team behind SGX Academy, a platform to drive financial literacy as well as investor education in Singapore. Personally, I have more than 10 years experience in this industry, and I believe that investing is a life skill that everyone should learn as well as have access to.
Hi everyone, happy to be here today. My name is Owen. I'm from SIAS. I'm 25 this year and I'm a fresh grad, and I have about 3 years of investing experience and looking forward to go more.
Great. So there's always this common excuse, right, that where for young people, they don't want to start investing yet because they think they don't have enough money yet. Right. So maybe, Regina, I can start off by breaking down this common misconception. And why is it so important to start investing early, even if you have just, say, $100 or $200?
At our parents' or even our grandparents' generation, it is in fact true, whereby there were limited products available in the market. You may need X amount of money in order to get started. But as the investing landscape evolves, we have different types of products or instruments available to cater for different needs, as in different lifestyle, different risk profile, or even different knowledge level. There's so many products available. All you need to do is to study and get started. And then you were saying that why is it so important to start at 100, starting small? Because big dreams start small. You should leverage on the power of compounding. Do you know that if you are to invest like $100 or $1,000 every month from now, your portfolio will grow and reaches 150,000 after 10 years with 5% of annual compounding interest. So you should start building the habit and try to learn as early as you can.
Yeah, I totally agree with that part where you say starting with this early can kind of ingrain it in you, the habit, right, to do consistent investing, because I believe that consistent investing is really one of the foundation to long-term wealth building this journey. How about for Owen? Did you ever had such a mindset thought before? Like, I don't have enough money, so maybe I wait first before you got started on your first investment?
Yeah, definitely. I mean, to answer the question, Hazel, back then when I first started investing, right, I recall it was like 2018. Yeah, and there weren't a lot of brokers or a lot of information available online. Yeah, so for me, even though I had savings in a savings account, I didn't know where I should put that money to use. And the only way for me that I'm aware of back then, because due to my parents' generation and the peers around me, I was only exposed to fixed deposit. Yeah.
Right.
But naturally, I realized that the fixed deposit was not giving me substantial income and savings. Hence, I decided to do my own research, and that's where I started investing into stocks. Yeah.
Okay, so I guess for you, it's not so much of you think not enough money, but rather for you is the kind of knowledge gap where you need to go and try and overcome that before you can get started, right?
Correct.
But would you say that a lot of people around you back then when you were starting, do you realize that most people are not yet investing also?
Yeah, I think that's a common trend also because it's not an in thing, right? I mean, like we look at now like TikTok as well as all the upcoming trends. They are very fast to adapt. But back then, maybe perhaps the technology has not been caught up yet. That is why perhaps my peers are not exposed to that financial investing path. Yeah. So
Now that you are in university, you are in an investment club, right?
Correct.
So that would give you more exposure, I suppose,
yeah,
to
definitely.
investments.
Yeah, definitely. So in SIM INC, we actually do have various departments which encompasses like technical side, like the trading
Yeah.
and the research, and the non-technical side, which I'm in, like the business development and the marketing and ops. Yeah, so we actually do have those intermingle meetings whereby we come together to bounce off ideas. Yeah, so that both sides of the party gets to learn something new.
Okay, so I guess the young students who are watching this episode in the future, when they join the university, investment clubs could be really a good place to
start.
get started. Yeah, and to get more exposure to investing. So coming back to Regina, then what kind of mindset do you think young investors or young people who are starting out should actually have when they are starting out with a small amount of money? So what should they be focusing more on, the kind of mindset?
I think it's important to be patient when you are starting with $100. So be patient with the amount that you're trying to build from, and then increase over time. Like when you're ready to increase it, just increase it. And then I think it helps when you have a financial goal in mind. It depends on the life stages, the different life stages. It can be maybe saving for a dream destination that you want to travel to, or it can be even for your very first property. As long as you have a financial goal in mind, I think it will help to keep you stay invested, even though it's a smaller.
I see. So I guess for me, I would think the most important focus is how to build that wealth sustainably, right? Because today it doesn't really matter that you are just starting with $100 and then you go to 120, or whether you're doing for 10K to 12K or 100K to 120K. The most important thing is if you already have that right investing methodology and strategy, then you'll be able to grow your amount of money regardless of what's the amount that you start off with. Yeah, and that's what can bring you further in this journey, right?
Yes.
So Regina, let's say today I'm a new beginner and I have $100 to start off with. So realistically, what are some of the options that are available for me to consider?
You can start off $100 with lots of stocks or even ETF. But for myself, I would think the most practical thing to start with would be the regular savings plans. They call it RSP in short. So why is it the most practical way to start investing? It will be because it's automated and it's simple, and then it's flexible. For a young investor, you can easily start $100 via RSP, because with that $100, you can choose to either invest in ETF, which consists of a basket of stocks, or even into a stocks, and then you leverage on the dollar cost averaging features of the plan itself. And then you don't need to time the market, and then you can ride through the whole market volatility over time. So that's why I think that it's the best product to actually get started with.
Right.
And then over time, you can build from there.
Right.
Until this very day, I'm still doing RSP myself. Yeah.
So for RSP, when the market is high, they will buy fewer units?
Yes.
Right.
So for dollar cost averaging, when the market is high, you tend to buy in at a less unit. And then when the market is low, you tend to buy more units. So over time, you manage to dollar cost average the pricing of the stocks that you are investing in. So in a way, the market fluctuation doesn't really affect your action, your trade. You can ride through the market up and down and somehow have a decent cost price to your investment.
So in a way, it kind of forces consistent investing as well.
Yeah,
I guess.
so you can basically subscribe to it and leave it aside and let it compound over time.
Okay.
For myself, I would basically go in every quarterly to look at my investment portfolio to see if there's any adjustment needed.
Oh,
So
that's
this
good.
is what we call the portfolio management, portfolio allocation.
I see. Then for Owen, how was your first investment like?
Wow, this takes me back down memory lane. I guess my first investment, how I derived at my first investment was, as mentioned earlier, through fixed D. Then I did my own research and I eventually looked into stocks. So how I made the decision was actually like most consumers did lah. I looked at brands that were already present in my community. So things like, Starbucks,
Yeah.
even my phone that I was using back then, I think it was like Samsung
Oh.
or Apple. Yeah, so naturally I decided to look more into these companies, and that's how I started on my first investment lah. And I recalled that my very first investment, it was BlackBerry. Yeah.
Oh.
Yeah, but I eventually sold it lah.
Okay. But I think that's a good point, right?
Ah.
Because a lot of people, they don't know where to begin.
Mm.
So just look around you, the brands that you consume every day. Some of this, they may come from Singapore. Some of this may be from international. But well, I guess that's a good point to get started. And because if those brands are so prevalent in our everyday lives, probably they are doing something well in their business, right?
Yeah.
And that's why we're all using their products and services. How about for Regina? How was your first investment like? Did you start with a small amount of money, and what do you actually invested in back then?
Okay, I started my $100 into Straits Times ETF, the Straits Times
Okay.
Index. Yeah.
Yeah.
The reason was simple. At the point of time, I was just getting started. I didn't know which stock to invest in. I
Okay.
didn't know which sector should I look at. So all I knew back then was I know Singapore is stable enough,
Okay.
and it can provide me with the returns that I can hedge against inflation. So I did a research. What are the components, Straits Times Index component, and it consists of the top 30 companies in Singapore.
Yeah.
So meaning if I am to invest into this ETF, it gives me like instant diversification into 30 stocks.
Definitely.
So that was why I started with STI ETF. And then slowly when my portfolio grew to a decent size, I started to look into different sectors, different stocks, and from there slowly to grow my investment portfolio.
I see. For myself, I didn't start off with individual stocks like Owen. I also started with like ETFs, unit trust. Because back then I don't really know how to pick individual stocks. So I thought, okay, maybe the more risk prudent way to get started. Because I know the importance to get started. So probably is to use like what you mentioned, right? All these ETFs that offer you instant diversification. I didn't exactly start with a few $100s, maybe a few $1,000s, but I guess that's still a very small portfolio to begin with back then, right? But for myself, I would say something interesting for my personal story is that I come from a family background where my father, he also invested in stocks, but he lost a great deal of money in those investments. And the reason why that was so is because actually he cannot really say that he's an investor. I guess he's more like a gambler mindset. So the kind of stocks that he bought were based on like hearsay, what they hear from his friends, stock tips. And therefore, I guess that's the top mistakes in why he lose money. He didn't really understand those companies. And secondly, when you lose money, you need to go and check your portfolio, right? To make a decision, should I continue on or should I cut losses? But he didn't do something like that as well. So that was why he lost a great deal of money. But despite that, despite coming from a background like this and where, every other day I'll hear my mother harping on all these lost stories, right? But I still think that it's really important to get started investing. In fact, right now I'm doing full-time on financial education. So that's quite different despite the kind of experience that I went through. So I guess the key message is because some of them, maybe they also come from a similar background like myself. Maybe some of your family members, relatives, they lost money. But that doesn't mean to say that it should stop you from investing. I guess you have to look at investing from a more rational point of view as well. Like, why do you want to invest? To see the why, and that's how it gives you the motivation to continue to invest consistently over time. Yeah, so that's my own personal story.
Back then, I did make the same mistake.
Oh,
so
okay.
after accumulating like maybe X sum of money, so I had a friend who came to me with stock recommendation, a few stocks, not only a single stock. So because I trust that friend so much,
Exactly, yes.
I put some amount into it, but I eventually lost maybe like 20 to 30% of the capital that I put into those stocks. So from there, I learned that eventually you will need to do your own research when you invest into such stocks. If your friends are to give you recommendation, at least put in the effort to do some research. Why are they saying so?
Yeah.
Does it still apply like at that point of time like the reason why they invest into these stocks. Yeah.
Exactly, yeah. So you must understand what you are buying. Right?
Yes,
If not, it will
yes.
be very dangerous and difficult to
Especially,
continue on the journey as well.
yeah, especially there's so many different types of investment scheme available now.
Yes, exactly. So for someone new who is looking to start investing, right? Maybe Regina can share with us how should that process be like? How do they decide which investment type? Because there's so many asset classes, right? Like we have equities, we have bonds, commodities, and so on. So how can they go about deciding which one to begin with? Is it due to their risk profile, their investor profile, or time horizon, things like that?
I think for an investor who is just looking to start investing, right, you need to understand your risk profile first. Like how much risk you are willing to take on.
Okay.
Like if you are those type who is okay to take on risk, who is okay for your portfolio to fluctuate a bit more, you can look for more aggressive kind of equities.
More volatility.
Yeah, more volatility because it can bring you to possibly higher returns. So I think from that point, you need to understand whether you are a growth investor or an income investor.
Okay.
So if you are ready to take on more risks, I would say you are likely the growth investor type.
Okay.
Like you may want to look into stocks that can bring you higher capital growth.
Okay.
But if you are like me, more risk averse type of investor, I would prefer the stocks which can offer you more regular income, which is the dividend stock. So for myself, I did some research. I picked ETF which provide me with more stable income, stable dividend over a period of time. That is how I would advise people to get started. Look at ETF first because it provides instant diversification. Then from there, pick whether or not you are going for growth or dividend.
I see. How about for Owen? Do you consider yourself as someone who is more risk averse or more risk tolerant?
I think initially when I started out, I was definitely very conservative because I was scared, you know. Like,
Yeah.
these are my
Some-
pocket money
Yeah,
and
and
savings.
something new, right?
Correct. And then
Yeah.
for me to put it into something that I do not have control over, perhaps, so that idea really scared me a bit. So I would term myself as a conservative investor at the start.
Okay.
Yeah, but currently I feel like, you know, as information starts to come in, you know, experience start to come in,
Yeah.
and as well as network with a lot of financial individuals, that's where I become a bit more risk tolerant. Yeah,
Okay.
and looks for more lucrative options lah.
I see. But I guess you also make sure that you take care of the risk, right, that you are
Yes.
exposed to.
Yes,
Yeah.
for sure. So like bringing back to the point that Hazel mentioned just now, because like if there's no calculated risk involved, it's just like gambling, right?
Exactly. At the start, maybe you are someone who's more conservative, but along the way, in the next few years, things might change.
Yeah.
So it's never a stagnant kind of investor profile for
Yeah.
anyone.
I think one tip from myself would be to always look at your portfolio, whether it's time to readjust it, rebalance it. Like let's say if you grew your portfolio into a 10,000 worth of portfolio, do
Okay.
consider like having a core portfolio and satellite portfolio. Core, maybe you can invest into things which is more stable, but also have maybe 20 or 30% of your portfolio to invest into more high risk stock for possible higher return.
Okay, so
Yeah.
core and satellite. Maybe let's do a very quick vibe check, right? So what I have here is I have 3 very simple, straightforward questions. And each of them, there are a few choices. So you just have to choose the multiple choice that suits you the best based on the question, okay? So
Okay.
that is to find out what kind of investor you are. So first question, you just got a surprise $500 bonus. What are you going to do with it? Okay, A, save that in the bank. B, buy something fun to reward yourself for getting that bonus. C, invest $500 and just forget about it. And D, try crypto with the $500 and see what happens to it.
I am definitely a C.
So I think my answer is clearly D.
Clearly D. Oh,
Yeah.
okay. Let me go through the choices first. Okay, so if you chose A, save it in the bank, you are someone who is more risk averse and you have a stronger saver mindset. So you may prefer things like fixed Zs, right? But if you chose B, buy something fun, you are more focused on the short term. Okay, to enjoy first, maybe spend first. So probably you might need a little bit of budgeting before investing. Now, if you chose C, invest it and forget, which is what Regina chose, you're a long-term thinker, suitable for things like ETFs, REITs, dollar cost averaging. And for D, what Owen chose, you are more of a risk taker. You're open to volatility. You want to get higher rewards from taking this higher risk, right? So, do you think it really is the kind of profile that you are based on the
Yes.
choices? Yes.
Yes.
Yes. For
Definitely.
Owen also.
For sure. Yeah.
Okay, now let's try the second one. Question 2. How do you feel when your favorite stock drops 10% overnight? A. Panic and sell. B. Hold on and watch first. C. Buy more because it's on discount. And D. Wait, I don't even check my investments daily.
For myself, it's C plus D.
100% C.
100% C. Oh, okay. Now let me go through the personality once again. So if you chose A, panic and sell, you have very low risk tolerance. So you probably want to look at more safer, stable assets like certain types of bonds, right? If you chose B, hold and watch, you are cautious, calm, and more likely comfortable with the diversified portfolio. Okay, and for C, which both of you chose, right? Buy more is on discount. You have conviction in what you invest in, and you are likely a little bit more risk tolerant. You may lean more towards growth stocks, DIY investing. And finally, D, that Regina also chose, that you don't check your investments daily. You are a very passive investor. So perfect match for ETFs, robo-advisors, and things like that. Okay, to see whether this is accurate or not, right? Because this year in 2025, the first half of the year, I guess there's a lot more volatilities, right? Not just only in Singapore, but international markets as well. So did you do what you chose in the first half of the year? Yes?
Yes.
Yes.
Basically, yes. Okay, I am a REITs investor.
Okay.
So I would admit that currently I do think that it's a discount for me.
And for Owen, did
Yeah, definitely. So, once back the US tariff war hits, right? So the stock market was plummeting.
Yeah.
It was like going to reach an all-time low. So there was a lot of panic, especially within my club and the people around me.
Oh, yes.
Yeah. However, as what I chose, the option was to say, buy more.
Of
Buy
the
more
good
discount.
companies.
Correct.
Okay, so I guess it's really very accurate. Okay. For me, at C also. Yeah, so during this first half of the year, I guess it's a very good shopping time.
all of us.
Yes.
Yeah,
Yeah.
whether is it Singapore REITs or any other markets as well. Yes. Okay, number 3. You prefer making money while A. Sleeping. B. Watch it grow slowly. C. Taking some high risks for higher returns. And finally, D. Let the robots or the apps do the work.
A.
You're A. Sleeping. Okay, and for Owen?
Up C.
Taking some risks for higher returns.
Yes.
Okay, so once again, if you chose A, sleeping, you are a more passive income level. I think you're very consistent, right? Yes.
Yeah.
So you like things like REITs, dividend stocks, long-term ETFs. If you chose B, watching it grow slowly, you are a patient investor. So more suitable for conservative assets. And for C, for Owen, taking some risks for higher returns, you are a more aggressive investor. You enjoy the volatility, you're not afraid of it, so you are probably more drawn to tech stocks, crypto. And finally, D, to let the robots or the app do the work. You're a hands-off taggy, ideal for robo-advisors, manage portfolios, etc. Right, so this is really just a very quick vibe check, just for fun, because I understand that the options are definitely not comprehensive, right? And there could be certain reasons why you chose this and that. But really the key message is to know more about your goals, your risk appetite, your investor profile, and that will help us to choose the right asset to begin on this journey. Now, something else that can really help the young investors, right, or young students who want to start investing is to find out more about the common mistakes that people tend to make so that they can try and avoid it. So maybe both of you can share with me, right? What are some of the common mistakes or the most top mistake that you want to highlight? Whether is it coming from your own past personal experience or from what you see around you? Maybe let's hear from Regina first.
I think for myself, the biggest mistake was what I shared earlier.
Okay.
To invest based on hearsay without doing my own research whether or not I should buy into those stocks. Another mistake I would admit is to, not really a mistake, I would hope that I invested more earlier
Okay.
to take advantage of the power of compounding. And I also hope that I was a bit more disciplined in terms of reinvesting my dividend.
Okay.
Yeah. So those are the few that I wish I would have done better. in the
I
past.
see. So in the past, when you got the dividends, you would just
Yeah, I will just
take them
spend.
Oh, you just spend to reward yourself for doing
Yeah,
something.
yeah.
I
But I learned from those lessons.
All
Yeah.
right. And for Owen,
Yeah, I think one of the top mistake that I would like to highlight, and I'm guilty about it also, is to have a persistent approach when it comes to investing. Yeah. So what I mean by this is, most of the time whereby we have a large sum of money or like we have some spare cash sitting on the side, we always invest emotionally rather than
Okay.
systematically. Yeah. So this is the mistake that I feel that a lot of investors, including myself, are guilty of. And I hope that, after today's podcast, the viewers are able to, instill some systems in place so that we take out the emotions.
I see.
Yeah.
Maybe you want to share an example of that emotional investment or trade.
I think there's many instances. Yeah, because given the fact that I'm a very aggressive investor, right?
Yeah.
So I guess we as humans are very swayed by emotions as well. So whenever like there's a particular news or like there's a lot of commotion about a certain stock, definitely I would also FOMO ma,
Yeah.
which links back to our podcast today, FOMO Fix. Yeah, so I also jump right into it. And yeah, it cost me quite a bit. Yeah, so after that experience, it's very important for me to instill some system in play.
Yeah. So having a systematic investment framework that
Correct.
you can stick to and manage emotions. I guess
Correct.
you can't take away emotions completely, right? Because we are human beings.
yeah.
But
Unless you do it via regular savings plan.
yes.
Yes.
But even then, some people, they might kind of stop it, right? Because when they
Yes,
see,
yes.
say, market crash, they are
Yeah.
scared. So then
Yes.
you should be buying, but they are afraid. So maybe they kind of stop that
Yes.
RSP as well. Yeah, so
Yeah.
things like this do happen. Yes, and I think that's one of the most common mistake that people tend to make in this journey.
Yes.
And well, today we're talking about starting early in this journey, right? So I guess maybe not just only look at it as starting early. Another thing is to make sure you start early, but you start off on a right note, right? So you have to be ready, you know what you're investing in, then you get started. But you don't rush yourself into it just because I know I must start investing. I need to start investing, but you are not ready. You don't have the knowledge. Then maybe it's still not yet the right point to go into investing. Yes. So let's keep this really open now. Owen, do you have any other questions or topics that you want to discuss today?
Yeah, actually, I have one question for Regina, particularly because, like, as for me, I'm a very aggressive investor. Then I'm also in a generation whereby, like, I'm very tech focused. Like, there's a lot of news out there in the market. Like, for example, TikTok and YouTube, we often do see, like, financial advice being given by financial professionals. Yeah, so
Yeah.
my question over here is, like, how can I as an investor or how can my peers, actually evaluate such news
Okay.
and see whether this content is useful or not useful for us?
I think the first thing first, you will need to try to identify whether or not it's scam. This, I would say there's so many financial advice out there which is promising, like, such a high returns that it cannot be true. Yeah, I believe like all of us have seen those ads and stuff. So you need to really verify, do your own research. There's no shortcut to it. So you need to really be able to tell whether or not these are scams or these are legit advice that you can really study further into.
I think it boils back down to you need to have some knowledge yourself. So you can't run away from it. Because when you have some knowledge yourself, that's where you are able to discern the information that you see. So maybe some of them, what they say makes sense, right? Or it's really done based on proper analysis, right? There's facts, statistics, financial numbers to support. But maybe a couple of them, for what they say, is made based on gut feel or based on mainstream advice, where you see this person A, B, C, they're all talking about the same kind of advice, right? Then, well, you if you are able to have the knowledge, right, then that's where you can kind of discern yourself. Otherwise, you wouldn't know. You might be led blindly. So at the end of the day, I think there's no free lunch. We still have to put in some effort to go and acquire some knowledge in order to be able to protect ourselves in this very information widespread kind of world that we are in. Yeah, and maybe one question that a lot of people have, right, is especially for the young students, is how much money should I really save up before I am ready to start investing? How do you see this, Regina?
I think you should at least have maybe 3 to 4 months of your salary into emergency fund set
Okay.
aside. an emergency fund which left untouched.
Okay.
And the next thing would be to have sufficient insurance coverage because that serves as a safety nets for the investment portfolio that you are going to build.
I see.
So once you have the emergency fund set aside and the sufficient insurance coverage, I think from then on you can start your investing journey.
I see. Then how about if let's say it's a student now, where maybe they haven't started working, right? Then but they do have some savings lah, maybe their ang pao money, or money that the parents give them along the years.
Yes. Okay, $100. I think for student nowadays, you can definitely easily fork out that $100 to start the journey. Because I think how lucky are the youngsters nowadays whereby you have your parents to fall back to. So you should really kickstart your journey, learn it along the way, and then by the time you have your first paycheck, you can do more. You are ready to do more.
Okay, right. So maybe before we wrap up today's podcast, Owen, let's hear from you. What's the top key takeaway for today?
From what we mentioned over here, is to stick to a systems approach. And really try to tide it out rather than invest emotionally. I think that's something that I can take away today. And of course, thanks for Regina for sharing the RSP. It's something that is quite new to me. Yeah, because there's a lot of like other instruments out there that I'm still unaware of. And thanks to this podcast, I'm able to get to know of all these financial instruments. Yeah.
And Regina, maybe you can share with us 3 actions for those who are looking to start investing in this journey.
First thing first, do your research. And second is to start. It's really very important for you to start small. And then thirdly, upskill yourself. Until this very day, I'm still doing RSP. But not into a index or ETF per se. But I think I know enough to invest into sectors, into different stocks for that growth opportunity.
I see.
Yeah.
Right.
So do remember to upskill yourself.
Right.
Yeah.
So I guess starting investing with a small amount isn't just only possible. In fact, it's one of the greatest way to get started in this journey, right? And you guys mentioned very good points. Like right now, yes, maybe you are dealing with a small amount of money, but it gives you more room to understand yourself as an investor, to build out the experience, the knowledge. Because by then, when you start working, you don't need to worry that you don't have the money to invest. Just set aside a small amount every month, and by then your portfolio size will be able to grow bigger. But the bigger problem is, do you know how to manage that bigger portfolio size when the time arrives? And market opportunities are plenty, right? If you are able to capitalize on it in the future, that would really help to compound and grow the portfolio over the long run, right? So, can you really begin investing with just $100? The answer is yes, it's possible. It's not just about the amount of money that you are beginning investing with, but most importantly, is taking that first step out to start on this investment journey. So here's a challenge for you. Take $100 this month and make your first investing move. Now, step 1, share with us in the comment section below on how you have invested that $100. And step 2, share your financial journey on either Instagram or TikTok and tag us in the post. And we might even reward you with another $100 to grow your portfolio. Until next time, keep a FOMO in check, stay informed, and happy investing. We'll see you in the comment. Thank you.
Thank you.
Thank you.
Okay. Thank you.
Thanks.
If you're feeling fired up and ready to dive deeper, feel free to hit us up. Leave your comments below. We would love to hear your questions and topics that you would like us to cover in future episodes.